Hello everyone, and welcome to Let's Get Real, this new podcast series we're gonna be starting here in this channel. So in today's episode, the very first one, we're gonna talk about the biggest challenge people face when trying to buy their first home, which is figuring out how they're gonna pay for it. So today we're gonna talk about finance. If you are a first-time home buyer, this episode is for you. And even if you have purchased a home, but that was like too long ago, you're gonna still find some valuable information here. So welcome to From Zero to Homeowner. And today, I'm inviting Andrew here. He's a mortgage expert who works with buyers for a very, very long time. So Andrew, do you want to come and introduce yourself a little bit?
Thanks, Yasmine. My name's Andrew Cady. First and foremost, I'm a father to 4 amazing children, a husband to a beautiful wife. I've got a great family living here in the amazing state of Florida. I'm a mortgage advisor with UMortgage. I've been in the mortgage industry for about 10 years, and I've closed just about 1,200 transactions in 10 years. I say that because there's about no scenario I haven't seen. So thanks, Yasmine, for inviting me on today.
So today we're going to cover down payments. And if you don't have enough money to down pay on a house and you are a first-time home buyer, we're gonna also talk about some down payment assistance programs that can help you come up with the money if you are a first-time home buyer. But if you are not, you might still be able to qualify as one. So stick with us if you wanna know more. We're also gonna cover credit. Credit plays a big and important role here because you need to have to, in order to get better loan terms, you need to have a good credit and also a long enough credit history. So we're gonna talk about some strategies that you can start applying right now if you're thinking about buying a home in the near future. We also gonna cover gifts because I am a millennial and the landmark of our generation is that we rely on our boomer parents to sometimes help with these important milestones in our lives. So we're gonna cover that as well. And if you stay all the way into the end, we're also gonna give you some tips regarding closing costs, especially in this market right now. So my first question to Andrew is, how much money do you actually need to put down to get a house? Is 20% true? Is this a myth? How much money do you actually need in order to be able to get a house? And if you can, also talk a little bit about some down payment assistance programs.
When it comes to first-time home buyers, there's a lot of options out there. But let's talk even outside of first-time home buyers. There's this myth out there that you need 20% down to buy a home. And I hear it all the time. And I just want to break that down. Whether you're a first-time home buyer or not, 20% down, yes, that gets you out of monthly PMI on a conventional loan. But it's not a requirement. You can still, as a non-first-time home buyer, buy a home with 5% down. 3.5% down. There's options. But going and talking specifically about first-time home buyers, there's some amazing programs out there. There's a program called USDA loans. Now, USDA loans, they are geographically restrictive, meaning they're looking to lend in rural areas. You can look up the USDA eligibility map and see if you're eligible for it. That's a zero down loan that I think is just greatly misunderstood. A lot of people don't know that program's out there. You can also look at FHA loans. Minimum down payment on an FHA loan is 3.5%. So again, not a huge down payment requirement. Even when you get into conventional loans, you don't need that 20%. There's 3% down options for a conventional loan for a first-time home buyer, 5% for a non-first-time home buyer, and we also have VA loans. VA loans are specifically for active duty military or veterans that have served the country, and they are offered a zero down home loan. And it's an amazing program because there's also no monthly PMI on VA loans. Outside of that, there's also grant money available. It can be lender specific or it can be state specific. There's things like the Florida bond program where you can get money to assist you with your down payment and closing costs. Also, Florida has the Hometown Heroes program. It's 5% of your loan amount up to $35,000 you can get as grant money. Now, it's important to understand on the grant money, a lot of times that is not forgivable, meaning if you ever sell the home or refinance the home, you got to pay that back. So make sure when you work with your lender, you understand the type of grant money you're getting, whether it's going to be forgiven or whether it's a non-forgivable loan. We also have lender-specific down payment assistance programs. We have programs that'll do 3.5% to do the down payment for FHA or 5%, and it all depends on the individual credit qualification. One thing to note is most down payment assistance programs do require a 640 credit score or higher. There are some that you could potentially get in lower than that, but that is kind of like the entry level for down payment assistance programs. And most of the programs have income limits. Not all of them, but most of them want you to earn about 80% of the area median income. So there's some quick facts and tips for you about the down payment availability for you as a first-time home buyer and really as a non-first-time home buyer.
Andrew, thank you for your answer. That was very, very helpful. And my next question for you is, what is a first-time home buyer? What is the definition? Do you actually need to be a first-time home buyer to be able to qualify for those types of loans and programs? Or what if you already purchased a home in the past? What needs to happen for you to be able to qualify again as a first-time home buyer?
You're exactly right. And the definition, first-time home buyer, most people would think of that as, hey, I have never owned a home before. But that's not necessarily the case. A definition of a first-time home buyer is someone who has not owned a primary residence, a home that you live in full-time, for the last 3 years. So if you owned a home 5 years ago, sold it, and you've been renting, you're once again considered a first-time home buyer. But some of these programs are not just specific to first-time home buyers. There's programs out there that can assist you with a down payment, even if you just recently sold a home. So it's one of those things you got to speak with your mortgage originator and ask them specifically for your scenario, what are the options that are available for you?
So now, Andrew, my next question for you, it's about credit. This is the part that gets tricky because sometimes people, they actually have some money to put down, but they are unable, or they think they are unable to get a loan because of their credit. Either it's not good enough or they don't have enough credit history. So how does that impact the process of obtaining a loan to buy a home?
You bring up a great point in talking about credit because it's one of the most misunderstood things out there. We get phone calls all the time where people say, my credit score is a 720 on Credit Karma, but when we run their FICO scores, it's significantly lower. It might be higher. Why? Well, because there's programs out there like what Capital One shows you or what Credit Karma shows you. They don't use the FICO scoring model. They use the Vantage scoring model, and it's very, very different. Here in the mortgage industry, we use a specific variation of the FICO model. So if you're looking to see exactly where your credit scores are, I would highly recommend signing up for myfico.com, myfico.com. It's about $40 a month, and it's a great credit monitoring program, but you can actually see what your mortgage FICOs are, and we tend to see those very, very accurate. When it comes to needs for credit scores, for instance, VA loans, there's a lot of lenders out there that say you need a 620 credit score in order to get a VA loan, and that is just not accurate. In fact, the VA doesn't have a minimum credit score requirement. That is something called an overlay by the lender. The lender says, hey, I don't want to lend money to someone below a 620 credit score, but the VA does allow it. Where I work, we're at a broker shop, so we've got options that you could go down to a 500 credit score on a VA. Really, to get the best terms on a mortgage, you need a higher credit score. Just a quick, rule of thumb is the higher your credit score, the better the terms. Why? Because the credit score is a representation of your credit history, whether you've paid your payments on time, whether you have had high balances or you've run low balances on your credit cards. So you want a higher credit score. It's going to get you more favorable terms on your mortgage. Some quick tips on how to keep your credit excellent. First and foremost, don't pay anything late. That, goes without saying. Pay your payments on time. But one of the most misunderstood things about credit is credit card balances. People get a credit card that has a $1,000 limit and they run that up $800, $900, and then they let that cycle over month. That alone will drop your credit score significantly. And what you have to do if you have credit cards is you have to keep the monthly balance below 30% of the credit limit. So if you have a $1,000 limit, you only want to put about $250 to $300 a month on that card and then pay it off or pay it significantly down every single month. That's going to help build a good credit history. The way credit underwriters look at that is somebody gave this client a $1,000 limit and they're not maxing it out. They're not pushing themselves to the limit. They're being responsible with their money. They're only using 25, 30% of that and they're paying it down every single month. This is someone that is financially responsible. So when you're looking for a mortgage, you want a great credit score. But if you have a credit score that's below, say, 620, it doesn't mean you can't get financing. There's a lot of lenders out there that will tell you you can't get financing, but it's just not the truth. There are options out there in the 550, 570, 580, 520 range that can make it happen. Are the terms going to be as favorable as if you had an 800 credit score? Absolutely not. But there's still options out there for financing.
So this next question is a question I need to ask. What about gifts? Us as millennials, we still sometimes rely on our parents for things, unfortunately. And in this case, how does a gift play a role in the loan approval application? Can you get a gift? Is that allowed? Can you apply that to, down payment, closing cost? What do you have to say about gifts?
That is a great point you bring up, Yasmine, about gift funds. So let's talk about it. Gift funds are often seen in cases where a millennial or a Gen Z is looking to buy a home. In fact, I helped my son buy his first home at 22 years old by gifting him the down payment. Here's how it works. For conventional and FHA loans, you can use the gift fund to cover the entire down payment and all of the closing costs. So you could truly come to the closing with $0 out of pocket. For VA and USDA loans, there's obviously no down payment. So you could use gift funds to cover all of the closing costs, again, coming to the table with $0 out of pocket. Now, there's a couple stipulations for investment properties and second homes with conventional loans. If you're looking to buy a second home, you can only use a portion of gift funds, meaning if you're the buyer, you still have to put 5% of your own money down as a down payment, and then the remainder of the down payment and closing costs can come in the form of a gift. For investment properties, gift funds, unfortunately, are not allowed. So it's a great option. We see a lot of young buyers looking to buy their first home, and they look at grant money. They look at the first-time home buyer options, and they say, wow, the interest rate is higher on that loan than I want to pay, or that money is non-forgivable, and I'm going to have to pay it back at some point. A lot of times, if you can get a gift, you're going to be financially in a much better situation than you were if you would have gotten grant money at a higher interest rate that is potentially non-forgivable.
Andrew, thank you so much for your answers. I think they were very clarifying, and thank you for agreeing to participate here. That was super helpful. And for those of you who stayed here all the way up to the end, I'm gonna give you some tips to reward you for watching all this long. Right now, we are in a buyer's market. So what this means is that we have way more inventory, meaning we have a lot of houses for sale, and we don't have enough people buying. So the sellers, they are basically trying to negotiate more than they would be maybe a year or 2 years ago when it was the exact opposite. So right now, you are going to be able to find a lot of homes where the sellers are willing to pay a portion of your closing costs. And if you're talking about buying a new build, the builders, the developers, they are actually willing to cover all your closing costs, so you wouldn't have to put a dime for closing costs. And they're willing to even give you some extra money so you can buy down your rate. So if you were looking to buy a house, now you're gonna be able to find a lot of opportunities, a lot of deals that you are usually not able to find when you have a hotter market for buyers into the deal. So if you're thinking of buying a house and you want to just know more or talk a little bit more, don't forget to reach out to me. I can help you out in anywhere in Tampa. That includes Clearwater, St. Pete, and all the vicinity cities. So thank you for watching all the way to the end, and I'll see you in the next episode.